You got your closing disclosure, nice. But now what? Let's break down everything that happens from clear to close all the way to getting your keys. So there it is. After weeks, maybe even months of searching, negotiating, mountains of paperwork, a very important document has landed in your inbox or mailbox. It's called the closing disclosure, or CD for short. Its arrival is a huge milestone in your home buying journey. It feels like the light at the end of a very long tunnel, a signal you are incredibly close to getting the keys to your new home. All the abstract numbers and estimates start to become very, very real. The financial blueprint for the biggest purchase of your life, laid out in black and white. Receiving your CD means your lender has approved your loan and is preparing to finalize the transaction. The official kickoff to the closing process, the final leg of the race. But what exactly happens now? It's not as simple as just showing up with a pen and a check. A carefully orchestrated sequence of events must unfold, designed to protect you and ensure every single penny is accounted for. This guide will walk you through each step of this final phase, from the moment you open that CD to the glorious instant you can finally call your new house a home. We'll demystify the jargon and explain the timeline, so you can navigate this last stretch with confidence and calm. Think of the time after you receive the CD as the final countdown. It's a period filled with checks, balances, verifications. While it might sound a little intense, it's actually a good thing. The closing disclosure is a 5-page document that provides the final, detailed accounting of your mortgage loan. The Consumer Financial Protection Bureau, designed it to be clear and easy to understand. A massive improvement over the older, more confusing forms. Its primary purpose is to spell out the exact terms of your loan and all the costs associated with it. Think of it as the final price tag for your new home and the loan that's making it possible. It will show your final interest rate and your total monthly payment. That payment includes principal, interest, taxes, and insurance. You'll also get a complete breakdown of all your closing costs, lender fees to title charges. One of the most important sections is the cash to close figure. This is the exact amount you need to bring to closing. It's the culmination of your down payment, closing costs, and any credits from the seller or lender. Seeing this number is often a moment of relief and reality. The CD also lists whether your rate is fixed or adjustable, shows any prepayment penalties, and the total interest you'll pay over the life of the loan. It's designed so there are no surprises when you sit down to sign. Acknowledging receipt of the CD is not the same as agreeing to the loan. You'll likely be asked to e-sign or reply to an email to confirm you got it. That starts a mandatory waiting period. It doesn't obligate you to the loan. Think of the CD as a detailed itinerary for a big trip, costs and schedules before you buy the ticket. The final loan documents you sign later are the non-refundable tickets. Use this time to review, not to panic. Immediately compare the CD to your original loan estimate. Once you acknowledge that you have received your closing disclosure, a federally mandated waiting period begins. By law, your lender must provide you with the CD at least 3 full business days before your scheduled closing date. This rule, known as the Know Before You Owe mortgage rule, was put in place by the CFPB to protect you, the consumer. The entire point of this waiting period is to give you ample time to review the final terms and costs of your loan without feeling rushed or pressured at the closing table. It's a mandatory cool-down period, and it's there for your benefit, so you should take full advantage of it. For the purposes of this rule, a business day is any day except for Sundays and federal holidays. Interestingly, Saturdays often do count, depending on the lender's business operations. For example, if you receive your CD on a Tuesday, the 3-day clock starts ticking. Wednesday would be day 1, Thursday, day 2, Friday, day 3. This means the earliest you could possibly close would be on Friday. If you received it on a Thursday, Friday would be day 1, Saturday would be day 2, Monday would be day 3, making Tuesday the earliest closing day. During these 3 days, your job is to be a detective. Go through the CD with a fine-tooth comb. Compare it to your loan estimate. Do the numbers match up? Is the interest rate what you expected? Are the loan terms correct? Check the spelling of your name. Check the property address. Even if you're ready, you cannot waive this 3-day period. It is a non-negotiable part of the process. Think of it as a mandatory pause button that the government has pressed on your behalf. This rule empowers you to walk into your closing with full knowledge and confidence. Use the time wisely to ensure everything is just right. Just when you think all the numbers are set in stone, you might receive a revised closing disclosure. Don't immediately assume something is wrong. This is actually a fairly common part of the process. Escrow and the lender are finalizing every last detail, so small adjustments sometimes happen. For example, property tax prorations between you and the seller might change slightly. The exact cost of your homeowner's insurance can be confirmed and updated in escrow calculations. These are routine tweaks that refine the numbers to be accurate. Most of the time, a revised CD is not cause for alarm. It does not restart your 3-day waiting period. Minor changes, like adjustments to seller credits, are expected. Minor changes, like small shifts in escrow impounds, are expected. Lenders must provide an updated, accurate disclosure, but if core loan elements stay the same, your closing date is safe. You'll get a new version showing the current figures. Review it, but you can generally proceed as planned. However, 3 specific scenarios will trigger a brand new 3-day waiting period. Per the CFPB, if one of these major changes occurs, the clock resets so you can review the new terms. First trigger, the APR increases. If more than 1/8% for a fixed-rate loan, clock restarts. If more than 1/4% for an adjustable rate loan, clock restarts. Second trigger, a prepayment penalty is added to the loan. Third trigger, the basic loan product changes. Example, expected fixed rate becomes adjustable rate. You get another 3 days to evaluate. These triggers protect you from last-minute bait and switch tactics. If your lender says the clock is restarting, one of these significant changes occurred. Understand the implications before proceeding. Use your updated CD and timeline to plan confidently. While you are patiently reviewing your closing disclosure, a flurry of activity is happening behind the scenes. 2 main players, balancing the numbers. The 2 main players in this act are your lender, the escrow or title company. Their primary job is to balance the settlement statement, the master ledger of every cost and credit. Think of them as 2 diligent accountants working on the same complex financial puzzle. They must communicate and collaborate until every line item matches to the last cent. The escrow officer gathers all third-party figures: seller's mortgage payoff amount, property tax prorations, homeowners association dues, invoice from the title company, invoice from the home inspector, invoice from other service providers. They're the central hub for non-loan costs. The escrow officer pieces together debits and credits for buyer and seller. This ensures the seller is paid the correct amount and that outstanding obligations are settled. Meanwhile, the lender's closing department focuses on the loan side, confirming the final loan amount, confirming the interest rate, confirming prepaid interest charges, confirming the initial escrow deposit for taxes and insurance. They then send their figures over to the escrow officer. The 2 parties compare numbers line by line. If there's a discrepancy, they update the figures, ensure compliance, and issue a revised closing disclosure if necessary. Once the lender and escrow company have balanced the books and you've passed your 3-day waiting period, your lender will give the green light to draw docs. This is industry slang for preparing the final, official loan documents for you to sign. This packet of papers is the legally binding contract between you and the lender. It's much thicker and more intimidating than the 5-page closing disclosure. This is the real deal, the set of documents that formalizes your debt and secures the property as collateral. When you hear the term final docs, this is what it's referring to. The most important of these is the promissory note. This is your official promise to repay the loan. It specifies the total amount you owe, the interest rate, the dates when payments are due, and where the payments should be sent. The second critical document is the deed of trust or mortgage. This gives the lender a security interest in your property. It's what connects the loan directly to the house. In addition, you'll have various federal and state disclosures. You will see another copy of your final closing disclosure to sign. Affidavits confirming identity and occupancy, plus tax forms like the W-9. The title company includes the grant deed and title insurance paperwork. The lender sends these to escrow, often electronically. Arrival of final docs is a major milestone. You can sign at the title escrow office with a settlement agent or notary, or use a mobile notary, home, office, even a coffee shop. Some areas allow remote online notarization, a live audio-video e-closing. Some documents, like the note, may still need a wet signature. Be prepared. It's a marathon. Yes, your hand might cramp. No, you're not alone. Don't feel rushed. Ask questions. For loan term questions, call your loan officer. You've signed the mountain of paperwork, and your hand has recovered from the ordeal. After you sign, the completed and notarized document package is sent back to the lender for a final review. The lender's funding department will check for prior to funding conditions, or PTFs, the last items that must be cleared before money is released. Buyer's funds received. Final credit check. Employment verified. This protects both you and the lender. One of the most important PTFs. Getting your cash to close to escrow, usually via wire transfer or a cashier's check for the amount shown on your CD. Absolutely verify wire instructions by calling your escrow officer directly. Use a trusted phone number, not an emailed contact. Wire fraud is a serious risk. Never trust wiring instructions sent via email without verbal confirmation. The lender won't fund until escrow confirms your funds are in. Lenders often do a soft credit pull to ensure no new lines of credit or significant new debt since approval. They'll likely do a final verbal verification of employment. This is why it's so important not to quit or change jobs, or make large purchases like cars or furniture on credit. Once the funding department reviews your docs, confirms your funds, and clears all verifications, they will give the official clear to fund. This is the moment everyone has been waiting for. It's the lender's green light for escrow to use the loan proceeds. Clearing all PTFs is the last hurdle before money moves and the property officially becomes yours. Funding is the moment when the lender wires the loan money into the escrow account. Huge step. The cash is now with the neutral third party. Escrow confirms your cash to close is present. The account is balanced. They have what's needed to pay the seller, pay off any existing mortgages, and cover closing costs. With the money in place, next step, recording. Escrow submits 2 documents to the county recorder, the grant deed and the deed of trust. The county stamps them, assigns a recording number, and makes them public record. That stamp is the precise legal moment you become the owner. Congratulations! The recorder notifies escrow. Escrow notifies your lender and your real estate agent, and then you. That confirmation is the finish line. Now escrow is authorized to disperse funds, paying the seller, the agents, and other providers. Your agent gets the green light to hand over the keys. That magical moment is finally here. Timeline can vary. If you sign early, funding and recording can happen the same business day. If you sign late, funding may occur that day, but recording may happen the next morning. Your agent will keep you updated. Once you get the call or text that you're on record, celebrate. You have officially closed. Welcome home. Getting the CD is a huge milestone. The finish line is in sight. Now you know the real timeline from clear to close, final docs, and funding, so nothing takes you by surprise.